In today's video, we'll talk about the secret to increase your credit score by 100 points in 7 days. If you're a newcomer to Canada, maybe you're looking to buy your first home, or you just want to improve your credit score, this is for you. I'll walk you through the exact steps that can make a real difference quickly. Watch through to the end, maybe write a note or two. Every detail matters here. You might be asking, can I transfer my FICO score or my credit history from another country to Canada? I'll answer that towards the end of this video. So make sure you stay tuned. One of the biggest hurdles you'll face is understanding your credit score and how it impacts your mortgage approval. Today, I'm breaking it down step by step so you know exactly what to do to boost your score and fast. Before we start, if you've ever struggled to figure out how Canadian credit scores work, drop your question in the comments below. I read every single one of them. Let's start with the basics. What is a credit score? A credit score can go by another name like Beacon score or FICO score, and it is the measure of how you pay your bills. A credit score in Canada is a 3-digit number that represents your credit worthiness. How likely are you to repay borrowed money? Lenders, including banks and mortgage companies, used to decide whether to approve your mortgage and at what interest rate. Depending on your score, you may get a really great rate or you might need a help from another person like a co-signer to get the loan, any type of loan. Did you know that there are at least 20 credit reporting companies in Canada? Each one of them has different way of scoring your credit. But the most important credit report that we will talk about today is the two most common used for getting a mortgage or home loan. So these agencies are Equifax and TransUnion. These two are kind of similar with a slight difference in presentation. Does your credit history get wiped if you move to another province at a later time? What do you think? Comment it down below. I will also answer that as a bonus question, so stay tuned until the end. As I mentioned earlier, there are two main credit bureaus in Canada, Equifax and TransUnion. Your score is calculated using 5 main categories. Number 1 is your payment history. Do you pay your bills on time? Number 2, credit utilization. How much of your available credit are you using? Number 3, credit history. How long have you had credit accounts open? Number 4, types of credit, or we call credit mix. Do you have a mix of credit like credit cards, loans, lines of credits, other loans, store loans, car loans, student loans? And number 5, new credit inquiries. How often do you apply for new credit? To build your credit fast, we will pay attention to the first two categories, the payment history and credit utilization, because these two categories alone make up the big chunk in the credit score pie, which is about already 65%. What is important about the payment history? Do you pay your bills on time? Here's a secret that most consumers doesn't know about credit scoring. When you receive a credit card statement, there are two important dates you have to remember. Number 1 is the minimum payment due date. This is when the bank checks if you paid your card and reports it to the credit bureau. That's the Equifax and TransUnion. But here's a hack that not a lot of people knows. Unless you set a minimum payment to be debited directly by the credit card company, you need to schedule or pay your dues at least minimum of 2 to 3 business days before the due date, because it takes 2 business days for the banks to process the payments. If you pay on the exact due date, you're already late. Let me tell you about paying minimum amount. In my example here, if you keep paying a minimum amount on due date, you will be able to finish paying this particular loan for 93 years. So it's important to pay down your full amount if you can afford it, 2 to 3 business days before the due date. Now, the second date that I want you to pay attention to is the cycle date or the statement period. Some statements will say opening and closing date. I'd like you to pay attention to the closing date. To ensure that you get the big points in this category, you have to pay full amount or the minimum due amount 2 business days before the due date. And this is important, do not spend anything using this card for the next 7 days. Otherwise, even if you pay the amount in full, then you spend again on the next day, then it will still be reported on the statement period. And because we're talking about utilization, so that means when it reports a balance over maximum limit, then you won't get the big points. Even if you pay the amount in full, when you spend again on the next day, then it would still be reported on the statement period. In this example, the statement period for the next statement cycle will start from August 21 to September 21. So if you paid in full on
the 12th.
and waited 7 days, this is the period when the credit cards report to the bureau. Then it will report no balance. You get the big points for payment history, which takes 30% of the pie. If you do this all the time on your credit cards, even if you roll them out, then you will get the brownie points to make to a maximum of 315 points. There is no exact way of calculating these points as Equifax and TransUnion, they don't disclose it. But how I figured out that number is because if it makes up the 35% and the perfect score is 900, so 900 times 35% gives you 315 points. So how they divvy this up, how they exactly find out the exact score, no one knows. Pay your bills 2 business days before the due date so that when the credit company reports to the bureau, it will say zero balance. So let me repeat that. How do you get the big points? Pay your bills 2 business days before the due date and do not spend for the next 5 business days. So it's like 2 days before the due date up to the day of the reporting date. It's basically paying your bills 2 business days before the due date and not spending it on the next 5 business days. So there's like 7 business days that you're not going to touch your credit card. If you do that consistently over the cycle period, then you will be guaranteed a higher credit report. So go ahead and check all your credit card statements. Each of them have different statement dates and due dates. So normally it will give you 21 days grace period to pay whatever you need to pay, but they don't tell you you're not supposed to spend within the next 5 days after paying it before the due date so that you will get all the good scores. Just doing this will guarantee you higher points in your beacon score. Now, the second big part of the pie is the credit utilization. This is where the trouble starts for most people. The advice is not to go beyond 30% utilization on any cards. So what does that mean? So if you have a $10,000 credit limit, you should not go beyond 30% or $3,000 on that to get the highest percentage, and at most cases, no higher than 50%. As your spending goes beyond that, you started to lose points. When I started using credit cards in Canada, I only have 2 credit cards. I have the TD and the Amex. And because I use it for my business, I would occasionally max it out to 90% until I get my paycheck, and then I would pay the full amount. I would ensure, though, that on tough times, I would pay at least the minimum. For the past 28 years in Canada, I never had missed a single payment in any of my credit cards, at least on the paper. There are occasions when I forget to pay it when I was manually paying it. So I would call the bank and process the payment over the phone. So it will still be recorded on time. But that was too much work. So I made sure that I have pre-authorized minimum payment debited 5 days before the due date in case I cannot pay the full balance on the due date. If you were listening to me, I said 2 business days, but personally, I do it 5 business days just in case. So you never know, right? And I try not to spend anything for the next 5 days. That is the secret why I always have a very high credit score, which I'm very proud of. If you wanted to have a high credit score, especially if you're looking to buy a house, implement this right away. Doing it my way will not get you a perfect score, but I was getting about 780 to 830 during those times. Another way to ensure that you don't go beyond 30% is to get a few more credit cards and spread the balance so each card will not go over 30%. But doing it personally, I'm getting confused which card I already paid. So today, I have a lot of credit cards because I set aside 3 business credit cards that I only use for one purpose. Say Costco card, I use only for gas. Amazon for my office purchases. Occasionally, my card gets compromised. This happens often in gas stations. So there were occasions where I have to travel through my listing and I put gas there. And then the next thing I know, a few weeks after, is that I get charged for some incredible things. Like, for one instance, there were charges about a Lux Canada, which is like something like limousine service for $3,000, and another one for like entertainment, and which maxed out my whole card. And when I put gas, I get declined. I said, why am I getting declined? I no balance in my card. So I go and check my balance right away, and lo and behold, there are those charges. And I can easily dispute it because they would see my history that I only use this card for gas and gas alone. So yeah, I always win this because they know my credit spending. And I never, ever go beyond what I'm supposed to not go beyond. Most occasions when the business is tough, I would go over probably just up to 50% and then I pay it back down. But if you wanted that points that I was telling you, you have to go below 30%. If you have a discipline, you can get many cards, but make sure that they are all below 30% utilization, and put an automatic debit of the minimum amount in case you forget if you go on vacation, or it's just so difficult to do it manually. Trust me, I've done that and it's driving me nuts. So probably you are better with counting them manually, but I don't. So I am just telling you and sharing the way I was doing it to ensure that I don't forget paying. Moving on, you can also ask the bank to increase your limit if your income allows it. If you increase to 20,000 limit, you can spend up to 6,000 without compromising your credit score. But the danger is if you're not disciplined enough, you may run into debt problems later. Remember, a credit card is for convenience. Do not use it as an ATM extension. If you do this religiously, every month you will definitely hit the credit score mark. Number 3, length of credit history. This is the time since you open your account. If you just recently opened an account, then there's not much history to tell. When I first came to Canada, I opened my account on the 3rd day from when I arrived. I remember arriving on a Sunday night. I slept through most of Monday because of the long flight. And then on the 3rd day, I went to 3 places. First to get my SIN, and I applied for OHIP card because it takes 90 days to have it activated. Then I went to the bank to get my first checking and savings account in this order. Because when you go to the bank, they will ask you for 2 government issued IDs to open an account. So I had my SIN and I had my passport. After getting my first job and I set up my pay with the bank, I also got my first credit card. It started very low, followed by another. So I have almost 30 years of credit history in Canada. This will get you up to 15% of the pie. If you could manage to keep it clean, do not delete or do not cancel your very first or your earliest credit cards because that will give you the scores for the credit history, which is about 15% of the pie. Next is the types of credit. You need to have different mixes of credit instruments to maximize your score. The different credit types you may have are car loans, student loans, furniture loans, RSP loans, any other types of loans that reports to the credit bureau. This will help the lenders to see how you pay your bills on different types of credit. Some people pay their credit cards on time but forget to pay their phone charges on time. This is one of the fastest way to ruin your credit. Also, even if you have 1 cent balance on your credit cards, make sure that you pay them because the credit card companies would not send you a statement for those. And then sometime later, you will get into collection. I've heard and seen people that gets into this trouble. So it's not how much you owe, it's how you pay what you owe. Lastly, number 5, you credit inquiries. How often do you apply for credit? It's a common observation that I see every day as a mortgage agent that some people are hesitant for me to pull their credit report because they are afraid their score will drop, but this is only 10% of the pie, so it won't really affect you a lot. The credit bureaus understand that if you're applying for a mortgage, you might be going around and checking rates here and there. If you do this within the 45-day window, the credit bureaus will look at it as just one instance and not penalize you for doing so. This is not the same case as if you're shopping for a car and going around different dealerships. Occasionally, lenders and banks will peek at your credit as well. This is called a soft hit. You will not get affected by this. You can also pull your own personal credit report for free once a year. Some banks offer this feature for free so you can monitor your report. But as I said earlier, when you applied for a mortgage, the mortgage broker or the bank will need to pull from their system. You cannot use the personal report that you just pulled. Now, let's talk about the credit score ranges in Canada. Credit scores in Canada range from 300 to 900 and generally fall into 5 categories. Number 1 is poor. That's between 300 and 559. If you fall into this range, you will not get a mortgage from the big banks and prime lenders. You will pay a hefty amount in lender fees and broker fees to get a mortgage. This amount can start from 1% to sometimes 13% fees or more. It pays to have an excellent credit. So start earning that good credit now. Number 2 is fair, between 560 and 659. At this range, you might get a mortgage from a prime lender, but your debt-to-income ratio is restricted, typically about GDS 35 and TDS at 40. Then next one is good, between 660 and 724. If you fall into this category, then your luck just opened. As your score goes up to 680, you will get better chance at getting good rate and your debt to income ratio is a bit higher. It will become like 39% for GDS and 44% for TDS. Once your credit score goes to 725 and 759, that's very good. And over that, 760 to 900 is excellent. When it comes to mortgage, there's no further incentive to you from getting these scores. But it's great to have an excellent credit. So any credit over 680, it doesn't really matter. Well, it does matter, but it's not gonna change your rate. For newcomers aiming to buy their first home, ideally you want to score at least between 680 and 700 to get approved and secure a lower interest rate on your mortgage. If you're new here, you might be wondering what happens to your credit from another country. Unfortunately, Canadian lenders usually don't consider foreign credit scores. That means you're starting fresh. But don't worry, that's why today's steps are so powerful. If you have a question about credit score or how to establish a great one, please drop me a comment below. Now, let's talk about the 7-day credit score boost strategies. Here are factual, proven strategies you can implement right away to increase your credit score fast, even as a newcomer to Canada. If you haven't opened any account with any bank yet, whether it's a savings or checking account or a credit card, you will not have a credit history yet. You need to have some form of credit account to start building your credit score. One thing I noticed when a newcomer applies for the first time and we pull their credit report, I would get either a beacon score of beacon reject or 950. But as you know, by now, the maximum score is just until 900. So it just tells me that you don't have a history yet. Getting a 900 score for a newcomer doesn't really mean anything as far as getting a mortgage because there's no history to tell. Now, if you have been in Canada at least a year and already have applied for some form of credit, then this action plan is for you. Number one, check your current score. Create an Equifax and TransUnion account and pull your credit with score. The last time I checked, it was still free. So probably it's still free by now. Number two, correct errors on your credit report. Mistakes can drag your scores down instantly. If you notice an error, whether it's your name, your address, your birth date, and especially your credit history, report it to Equifax and TransUnion right away. I just wanted to remind you that these two credit bureaus cannot alter your records. By the way, they are just credit reporting agencies, so you will need to file for dispute and they will contact the financial institution you're disputing about. It will take probably about 4 to 8 weeks to resolve the issue. So it is important that you monitor your credit regularly if you're planning to buy a home. So you can resolve the issue before applying for a mortgage pre-approval. Now, let me share you some issues that I see when I'm pulling a credit report from a client. Number one is sometimes they have mismatched names. So what it is, for example, is if you have a father and a son, a mother and a daughter that has the same first name, because in Canada, even if you have like a million names or one or two or three names, they only record the first and the last name. So if you are a junior or a senior, or you have the first, the second, the third, or let's say, for example, Maria Corazon, Maria Antoinette, Maria Isabel, then when you create an account with a bank or any other institution, they will just put Maria and then an initial and then your last name. But what if your initials are the same? So it will be total chaos. What I do, for instance, my daughters, they have two names as well, is I put on their first name, the first and their middle name. So for example, if you have Maria Isabel, I put that as a first name and then the last name. So that when we get a passport, we get driver's license or any other documents, it's always there. So there is no way that it will be messed up. Now, the other thing that I noticed is when you have a junior and a senior, which has exactly the same middle name, first name, and a last name, even though you have different birth dates and you have different SIN numbers, when you pull this credit, it doesn't show that right away. It accumulates different credit activities. That I have that recently as well. And every time, let's say if we resolve it for this instance, 5 years down the road, when you are renewing or refinancing your mortgage, it will come again. So the best thing to do for this is from the very start, make sure that if you have a junior and a senior, put that in your name. Let's say for your first name, put there John Jr., or you can put on the last name the Junior. Whenever you create an account, savings, a bank account, credit card, make sure that those names are there. Otherwise, it will be a total mess and it will be there to haunt you for the rest of your life in Canada. So do it now. And if you are already in this mess, or if you already have your own credit in Canada, and this is happening already, make sure that you have some documentation that you're a junior, a senior, or you're a first or a second, and resolve this right away. Change your names with your bank account and make sure it's consistent with all your accounts so that this problem will not happen again. And if you are already having this problem, you have to dispute this with the two credit bureaus with your documentations, of course, so that they will fix it and put a notation on your record that this is what's the case. Otherwise, when your dad or when your son gets a credit, let's say a car loan, a student loan, or a mortgage, it will always add to your record. So that will bring down your credit score. That's a tip that you have to check. And also, one thing that I noticed, this is with regards to my mom. When we first register her, the teller that took the information, I think mistyped one of the numbers in the birthday. I don't know if it's the month, the day, or the year, but when I was creating an online account for her banking, I couldn't really do it because it's telling that the birth date is incorrect. So what we have to do is we have to go to the bank and we have to present some documentations and make sure that this is resolved so that it won't happen again. So every time I had to apply for something, we had to present the document. So make sure from the very first time that these things are properly recorded. And also, the case with my brother, his first name was misspelled and he didn't care about it because he didn't notice it. I was the one who noticed it. So because it was on his SIN, all the other documentations that he have has been incorrect. So from the CRA to the bank account to the driver's license, everything is incorrect because of that. He has to fix it. I'm not sure if he already fixed it, but he will eventually have to fix this and soon because it will create chaos. So I hope that you learn from this and make sure that when you have registered for your account first time in Canada that everything is correct. So make sure you check it with the teller, let them spell it back to you or show you the spelling so that it will be correctly done. Now, number 3 is lower your credit utilization. So keep your usage below 30%. Number 4, make small payments multiple times per month. If you cannot pay a lot at one time, pay a little bit every week. Helps reduce utilization and shows positive payment history. And number 5, become an authorized user. If you know someone that has a good credit, then you don't have any credit yet, you can be a second user. The problem with this that I see is once that original borrower had a mark on his credit, it will also affect you. Use this only if you really trust that person and you know that that person would never, ever mess up his credit. But you never know. You cannot tell. You have to pay attention. If someone you trust adds you to their credit card, you benefit from this positive history. Number 6, pay off small balances completely. So sometimes the credit card will have a balance of 1 cent, 3 cents. So the credit card companies will not send you a statement for this because it costs them money, right? So what you do is every statement period, you have to check if you have a balance. And if you do, pay it right away. So what I do with this is I technically create a pre-authorized debit for the minimum payment every single month so that I will never miss a payment. This actually quickly impact for a fast credit score increase. Number 7, use a secured credit card for newcomers. When you just first came to Canada, no one will extend you a credit. So in order for you to be proactive and start earning the points already, is you must have a credit card. And to do this, if you have some money that you brought in from your country, is to open a secured credit card. Let's say you have deposited $1,000 into the credit card company as a secured credit, then you will have that limit for that credit. That is your maximum limit. But as I was saying earlier, you can only use 30% of that to build a good credit. So let's say you had $1,000 secured, which is coming from your own bank account, then you can only spend 300 out of that. And this will report monthly to the credit bureau. And also, these secured credit cards have annual fees. So you have to be careful not to forget paying the annual fee even if you have zero balance. It will still collect. Okay, so this secured credit cards will help you gain scores or gain credit in Canada. for the first few months and you wanted to start building your credit, open a secured account. And then at 6th month, try to open a credit card with a bank if they will let you. So normally they will give you probably $300 to $500. That's fine. As long as you try to spend it just below 30% and pay it on time, pay everything because it's a little number. And then until you can have like say 3,000 credit limit in your card, that means that you are starting to establish a good credit history in Canada. Once you have that, and then try to open another credit card, which is hopefully having a bigger number. Normally, you will have this once you have your payroll. Let's say you open a payroll with a bank. That same bank, they will know that you are going to get a pay every time. Now, you can ask them if they can give you a credit card. And if they start giving you at least 3,000, probably within the 6 to 12 months, and you have at least 2 types of credit, then you can start applying for a mortgage. As I was saying, this secured credit card builds positive Canadian credit history efficiently. If any of these strategies stand out or you've tried something similar, leave a comment. Your experience might help other newcomers. It's always great to share tips with that community. If I could do it starting from zero, you can too. If you're planning to buy your first home and want a help in boosting your credit score, contact me. Now let's talk about common mistakes to avoid when you're building your credit. Even with the right steps, some mistakes can hurt your credit score. Number one, avoid applying for too many products at once. Let's say if you apply for a credit card today from one bank, don't apply for another on another bank right away. Number two, maxing out your credit cards. As I said earlier, this makes up 30% of your credit score. Number three, missing even a single payment. So this goes on the credit history, which makes up 35% of your credit score. Closing old accounts too early. As I said earlier, it makes up 15% of your credit. If it's not the secured credit card that we opened that has an annual fee, then do not close it. As long as you have a zero balance in it, it is good for your credit history. Ignoring bills not linked to a credit card, like utilities or phone payments. So sometimes these bills get sent to you on a statement monthly, and you have to go and manually pay this. Make sure that you pay all of this, your hydro bills, your Enercare bills, and especially your phone bills, because this is the fastest and surest way to bring down your credit scores. And also, once you are on a phone contract, do not just cancel it because they had a bad service. Make sure that you complete your contract before doing so, because a lot of borrowers have that mistake that because they had a bad rap with the phone company that they will just cancel it because it's a contract. So that is a breach of contract and they will surely report you to the credit bureau. A lot of borrowers get ruined like this. So don't fight it. And also if you have a dispute with a phone company or any other utilities or whatsoever, credit card, you have to keep on continuing to pay minimum for these cards or phone or utilities until your dispute is resolved. Otherwise, this will keep on reporting monthly on the credit bureau. And for the first month that you missed the payment, it as an R2. And then the next month that you stop paying, R3, until you reach R9, which is collections. When you're in collections, you will never get a really good rate, or it will be really, really hard for you to get a mortgage. Which one of these have you experienced? Drop a comment. Your story might help someone else avoid the same mistake. Now, let's set yourself up for mortgage success. Once you boosted your credit score, aim to maintain it. For first-time home buyers in Toronto, a score of 680 plus puts you in a strong position to get approved with better mortgage rates. This small boost now could save you thousands in interest later. To recap, understanding your credit score, implementing these 7-day strategies, and avoiding common mistakes can give you a significant advantage as a newcomer buying your first home in Canada. Remember, starting from scratch doesn't mean you can't catch up quickly. You have the power to take control of your credit today. To answer the question whether your credit history will be wiped off if you move to another province, well, not really. The credit history is good anywhere in Canada. So keep your credit at excellent standing at all times because it will work for you eventually when it's time to buy your first home in Toronto and the GTA or when it's mortgage renewal time. So now you know why different people gets different mortgage rates even if they apply to the same banks at the same time. Your credit report plays a big part. If you're ready to start your mortgage pre-approval so you can buy a home for the first time, I will drop that link somewhere in the description below. Now that you know the secret to increase your credit score by 100 points in just 7 days, the next step is learning how to build your credit from bad to excellent in Canada, even if you're starting from zero. Check back on this channel to watch that video and take your Canadian credit to the next level. Don't miss it. Your mortgage approval and better interest rates depend on it.